Hi all, thanks for joining us today on our session of Generation X, Y and Z Investing, the New Ways to Wealth. I'm Leanne Bradley, Principal and Partner at a consulting firm called Sweet2Go. At Sweet2Go, we connect world-class fintech to the Australian financial services industry. And today we're joined by three great fintechs from the Australian market. I'd like to welcome today our speakers. First of all, we have George Lucas from Raiz. We have Ivan Tchourilov from Open Markets Group, and we have Cath Whitaker from SelfWealth. So thanks very much, all of you, for joining us today.
Thank you for having us.
It's great to be part of this session for the 2021 World FinTech Festival. So I'd like to start with you, George. Tell us a little bit about Raiz and what role it plays in the wealth management industry.
So Raiz is a mobile first app, so it's delivered on both Android and iOS. We do have a web app as well. And the thing about Raiz was we brought it out to kind of simplify or make easy investing. So one of the things is we have a very small minimum limit, which is so you can be fully invested in the market from $5. We had a very easy sign-up process. So as you go through the sign-up process, you're AML'd and KYC'd at the same process at the same time, so that, you know, by the end of 5 minutes, you can be signed up and ready to invest. And when we first came out in Australia, our main value add feature was called roundups. It's now pretty much been adopted by a lot more players than when we were the first ones really in the Australian market to have it. And that allows you not to think about how much you invest. The investing just happens in the background of life. So as you spent on your debit card or your credit card, the app would automatically work out, round up to the nearest dollar, and you would automatically invest into the market. But we also have other ways of investing, which were lump sum and setting up a savings plan or a recurring investment. And as we've grown, we now have customers with over, $1 million with us, and we have customers who have got $300 with us and saving, to get $2,000 to meet a savings goal. But we've also added other portfolios. We initially started off with an aggressive portfolio and to a conservative, so 5 choices. And then we've added since then an ESG type theme portfolio that we call Emerald. We've added a Sapphire portfolio, which has this alternative asset class called Bitcoin in it and up to a 5% weight. And then recently, the most recent one is that we'd start to allow people to custom select what their portfolio asset allocations would be from 16 ETFs and Bitcoin. So we continue to involve with our customers. We've been in the market now for over 5 years. We have approximately 280,000 people just in Australia who use us, but we've helped over 500,000 people save and invest in Australia since we've launched. So for a country of 20 million people, we've begun to introduce this concept of investing from the palm of your hand into the market for quite a lot of people on the Australian landscape. We've also moved into Indonesia and Malaysia. We have an operation in Indonesia and Malaysia now, and we're working on an operation in Thailand. And we're being very well received up there because Raiz is an aspirational app. It's about, improving your financial well-being. It's about learning about markets. And we often hear people say, when I get to $5,000, I'm going to close down my Raiz account and move to a stockbroking account. And they're using the app to learn about markets. And we're helping them improve their financial literacy. But saying that, it's not just a toy. Our returns have been great. We have a super product now as well. So we continue to expand the product. And, obviously we were, 60 years ago when we came out, what we were doing was kind of like, pie in a dream. And we've been able to achieve it. I don't think anyone ever expected at that time that we would touch so many people as we have and help so many people save in Australia, save and invest in Australia. And we see a lot of the competition in the market is really about catching up to where Raiz is, rather than actually building their own product pipeline and going down different ways and innovating in different ways like we did, but really just trying to catch up to where we are.
Thanks, George. It's been an amazing journey that I've watched, and a really great idea to link shopping with investing and learning both sides of the budget, both the spending and the saving. So a fantastic initiative. Now, you mentioned your expansion into Southeast Asia. and some of the countries that you've been focusing on there. Can you expand a little bit as to why that was your next area of focus for Raiz?
Yeah, sure. We're building Raiz as a company that's going to be here forever. And so, in Australia, we're cash flow positive, which again is a major achievement for a company in the wealth management space. Yeah. But, we've heard a lot about it, and it's so true that, this century is the Asian century, and we have the Asian markets on our doorstep. Even though it's a 6-hour flight from Sydney to Jakarta, you can actually fly to our nearest airport from Jakarta in 40 minutes. So we are very close to Indonesia from a distance point of view. They have a very large population. They have a very aspirational population as they change the profile there. And, when we first started off, there's probably going to be about 55 million people in the consumer class. We expect that to be around 110 million people around 2030, which is not that far away anymore. And so the same type of dynamics is happening not only in Indonesia, but Malaysia, Vietnam, and Thailand, where the populations are, 3 to 4 times the size of the Australian population. So, and they need tools like Raiz. And one of the reasons they need tools like Raiz is because they've skipped the PC, they skip the website. So people, when Westerners go up to Indonesia, they find it quite hard when they do Google searches that nothing really comes up on websites, because the whole country's really just skip the website and move directly to mobile phone apps. And so Raiz was very well positioned, being a mobile first application, to be able to deliver into those markets.
Absolutely. And there's certainly a number of the population in that region that we call the unbanked. And so through the mobile apps, it's a way to tap into those non-bank participants. Looking at the industry as a whole, George, what do you think are some of the biggest benefits of the industry taking up in this way for both investors and service providers?
Well, it's quite unique, and especially in Australia, the unique thing which is happening in Australia is that where a lot of Australians would have gone to financial planners before to get their wealth advice, they're beginning to get priced out of the market and only looking after people with very high balances. The beauty about tech is that we can look after people with very low balances and also give bite-sized advice at the time they need it. So one of the things that Raiz will do is, because we have a lot of transactional data, we can actually analyze, do you really, and give you financial tips about helping you to save and invest more money if you require, or in real time when you need it, and which is very personalized. Yeah. And we are in Australia, which is a very strange thing. We are at the same time, just due to regulation, pricing out the financial advisors who in the past would have been giving a lot of this advice to the middle to low incomes of Australia, and now just can't afford really from their own compliance point of view to deal with them.
Absolutely. Spending most of my career in the asset and wealth management industry, being able to give more advice to more Australians is a great goal to have. And I know some of our other speakers have similar aspirations as well. Thanks very much, George. Ivan, could you tell us a little bit about Open Markets Group and its role in the wealth management industry?
Yeah, sure. So Open Markets Group came together at the end of 2019, technically, officially in 2020, out of the merger of My FinTech Trade Floor, which is risk management focused, actually a founding startup in the Stone & Shock ecosystem here in Sydney, and Open Markets, which was a big infrastructure provider. So we've sort of taken on a bit of a different journey sort of since we came in. Both SelfWealth and Raiz have been long-standing customers well before my time with Open Markets, and essentially at its core, we provide the pipes and plumbing to the exchange. Many different ways of calling us: broker as a service, trading as a service, fintech for fintechs, whichever one you want to go and say. But essentially, the thing that we've done is we've managed to go on and build a leading API stack and take all of that complexity of the back office behind that, operations teams, trading teams, and regulatory framework, and expose a whole heap of stuff for guys like SelfWealth and Raiz and many other companies that we've got within our network to go in and be able to innovate faster, to reduce the friction of accessing the market, to reduce the headcounts required to go in and get to their destinations, and through the scale that we've managed to go in and achieve, we've managed to significantly reduce the cost of actually getting access to the market. So kind of enabling fintechs to be able to go and innovate and be able to be competitive. And I think the most interesting thing is you look at, and you will hear Cath's side as well, after George's side, completely different approaches to tackling a similar problem. And we're very happy to be in the middle of it, to be able to go in and help as much as possible for these guys to innovate.
Absolutely, and I'm sure both George and Cath are really appreciative of groups such as yours to enable their businesses to do what they do.
I hope so.
Yeah. Now, obviously, through groups such as yourselves, as well as your partners, there is ever increasing accessibility to trading. And more people are trading as a result of technology such as yours and others that we have on the panel today. What do you sort of see of this increased trend, as well as some of the risks that this may pose to inexperienced investors?
Yeah, look, I think, I mean, there's a couple of parts to it. I mean, broadly, our business caters also for the IFA sector, so financial planners and et cetera, who get access to a whole heap of technology that we've got that sits on top of that API stack that I mentioned. So, you know, they've always been wealth focused, and they're continuing to be wealth focused. In terms of the direct consumer, I think that really for us as enablers, across everyone who is on this panel, who is enabling essentially that accessibility of the market, of the younger generation. I mean, basically, our responsibility to them is to be able to go and provide education. And so I think that the sort of the regulator approach to this globally has been, you know, it's bad, but it's not, right? Like, the reality is that people should get more involved with their finances. They should be more, they should be owning what they're doing a lot more. I think that if you sort of look back historically, the big revolution came many moons ago when CommSec launched, you know, the first broking platform. At that point in time, though, every single major person who was trading through CommSec also had an advisor on the side that was sitting there and giving them ideas. As people started trading more and more online while taking the ideas, you know, that caused that major fragmentation in the advisory market. They suddenly, you know, stockbrokers lost their research teams. And then, you know, it was, I think, 2015 and 2016 when SelfWealth and Open Markets did that deal. You know, at that point in time, SelfWealth was already offering $9.50, further giving accessibility into the market. And I think that where we've seen the market go right at the start of COVID was that suddenly there was this influx of people. There's a increasing distrust towards the broader financial services industry, and so everyone finds themselves on Reddit. And so, unfortunately, it's not really a sign of the fact that, you know, that anyone's done anything wrong. It's just technology has far outpaced the growth and the demand for people to access the markets, as opposed to the infrastructure providers, if you will, not from the pipes and plumbing that we do, but from the education, from the trade ideas, and from all those traditional pieces of the advice industry that have just been ripped apart to their own different little fragmented units. So I think that collectively that's a big thing that I hope all of us are sort of thinking about, but from different directions.
Absolutely. I mean, just giving people more access to the understanding of investments is for the benefit of all populations. And then hopefully people tap into the right resources at the right time during their life cycle. So, and technologies enable people to, I guess, more people to tap into that. And have more access so that they understand investments a whole lot more, which is great for the industry as a whole. Tell me, through the years of Open Markets Group, what's some of the best feedback you've had from the market around innovation in trading and wealth management?
Yeah, look, I mean, it was nice to sort of get recognized in a few of the awards over the last year, but essentially, I mean, the most important part is the uptake. You know, we've grown quite a lot whether that be through our clients as clients. So obviously SelfWealth, you can see very publicly how quickly and rapidly that business is growing. We're servicing about 5 times the accounts today that we were at the start of my journey into the business, actually more now, and adding basically 15 to 20,000 accounts a month now across different platforms that exist within our ecosystem. So I think that, at the end of the day, the most important thing for us is to go in and be able to cater for the feedback of our clients, to be able to go in and, as I said, reduce that friction as much as possible, and be able to allow companies to go and innovate faster. Our market share in the space has grown. We've raised about $17.5 million this year, actually, from our clients, from fund managers and etc. And that's been quite a nice little tick of approval, if you will. That was my first ever raising experience as well. So it's been an interesting journey. But look, I think that across those metrics, it's probably a pretty nice little feedback point. But there's still a lot to do and still a lot to progress, and hopefully 2022 sees us achieve some of those goals.
Yeah, absolutely. The best feedback is those that endorse and use your product. So well done on that. Cath, tell us a little bit about SelfWealth and its role in the industry.
Yeah, thank you. So SelfWealth is Australia's most popular online equities trading platform. However, we're moving at great speed to be the most popular wealth creation platform. So we're the classic fintech story. So we started with our founder about 10 years ago, very small office in leafy Melbourne. We're now at the stage today where we have over $8 billion worth of assets on our platform. Our active trader base continues to grow every single day. And look, the reason for the success is that we've been a company of firsts. As Ivan mentioned, we were the very first to conceive the idea of flat fee brokerage for Australia. Just last month, we were the first platform to introduce ESG data free of charge to all of our community members. From day one, we were more focused on building communities so that investors could talk with each other, share their successes. And, as we move forward, of course, we've announced a number of things already, but, one of them being crypto, going live, being the very first platform to be able to trade equities and invest in crypto in Australia. I think the other thing that SelfWealth is also famous for is our deep commitment to providing independent thought leadership and education around investment. We see it as a huge responsibility that as the addressable market grows, i.e. more and more new investors are coming into the space, then we want to make sure that we have information ready for those people to help them decide what is the best investment approach for them. And I think, in terms of the greatest compliment that SelfWealth has received is our very high referral rate. So, at least 50% of our new business is generated from existing SelfWealth members referring the platform to their friends and to their family. So that trust concept is just hugely important to us.
Absolutely. The power of word of mouth is critical to business success. Certainly a lot of firsts there, Cath. Now, one of the firsts that you mentioned was the move into crypto. Tell me a little bit more about that move, the decision around it, and also if you have any views on what it means with the recently released Australian government report on crypto assets and what that means for the trading of crypto.
Yeah, absolutely. So there's one reason why we're introducing crypto, and that's because our members demanded it. We did extensive research in May this year. It became very apparent to us that at least 30% of our members are holding some form of crypto. There's various figures touted in the Australian market in terms of, it's 1 in 5, it's 1 in 4 people holding crypto. doesn't really matter to us. That means that there is just a huge demand for it. But, what's as equally important is that, people are asking, yes, but how? I've heard crypto is scary, and, the latest kind of scam coin came out, I don't want to be caught up with that. So the way in which, SelfWealth will be implementing crypto very soon is to do it in a simple way, to offer people just 5 coins, to make sure people understand the true speculative nature of crypto, and also to make sure that the best information is readily available to people as they're making those decisions. Of course, we've given an enormous consideration to custodial aspects of that. In terms of, recent communications from either our Australian Senate through a Senate committee report or through guidance notes provided by ASIC, for us, that just proves again, SelfWealth were there first, anticipating where we thought, this would be. We welcome those communications. It gives credibility. It sets up Australia to be a true global powerhouse in terms of, crypto innovation. So we see it as being hugely positive. We welcome the regulation. We want our retail investors to be protected.
Yeah, absolutely. That information piece, as well as the education, is critical when it comes to new asset classes such as crypto. I've worked all my career in investments, and it's the first time my nieces or nephews have ever asked about any sort of asset class. So I certainly always point them in the right direction for information and education first before taking that leap. George, you also mentioned that Raiz has moved into crypto as well, but a slightly different approach to SelfWealth. Tell us a little bit about how you're enabling your members and investors to access the asset class.
Sure. So at the moment, as Cath pointed out, crypto is going through, a Senate inquiry and having a look from ASIC. We actually got a relief from ASIC to be able to combine crypto, in this case Bitcoin, and this is like nearly 18 months, 2 years ago, into our portfolio. So we treat it as a asset class, an alternative asset class. So people have 5% exposure in their portfolio if they choose to in Bitcoin, and we only offer Bitcoin. It's treated like any other asset class. So if it goes overweight, it'll be sold down. If it goes underweight, we bought it back. It took us about 18 months of discussion with ASIC. We're probably only at the time, we were probably, the first or second company in the world to be able to include crypto in, like a mutual fund structure for a retail client, which is regulated by a regulator, which is, highly respected in the world, in this case, ASIC. There've obviously been more since then, but there are very few, companies in our position where, ASIC has actually given, in one of their reliefs, the ability for us to put Bitcoin into our portfolios.
Yeah, no, that's great. And as a portfolio manager previously myself, it's always good to see that there's new asset classes that can be added into clients' portfolios, albeit done with some sort of risk measure around that. So that's an important aspect to portfolio management. Tell me, a question to anyone in the panel that would like to answer. What has it been like setting up and running your business in Australia? And what are some of the opportunities that have arisen from being based in this region?
Yeah, but perhaps if I make a start. So, I actually came back to Australia after 20 years abroad in April this year, having worked in the US and the UK and Asia. And so, coming into still a relatively small fintech like SelfWealth, what I've really enjoyed is, just the innovation mindset. And I think, a true belief in, let's just try this, let's just give this a go. And, just a willingness to say, actually, we're going to make this happen. This is going to be a success. There's immense talent, there's immense skill in Australia. Although what I would say is, I am welcoming the borders reopening so that, we can welcome more of that tech talent back into Australia. Look, in terms of opportunity, and I think George, touched on this with the successful Raiz model, is, you know, whilst the market opportunity in Australia is big, of course, what we really look forward to is overseas opportunities and particularly opportunities that, you know, exist in Asia. So I think, you know, most Australian fintechs don't go in with the mindset of just Australia. You know, we really do see it as a good base to then go and build and see what can be deployed elsewhere.
Absolutely. I couldn't agree more. While we at Sweet2Go tend to work with fintechs from offshore into the Australian market, there's certainly been increased demand for our knowledge of the offshore markets to help firms such as yourselves expand into overseas markets. And I do think that the culture that we've built in Australia over the last few years is fantastic. Innovation mindset, and groups like Stone and Chalk have certainly helped with that as well.
Yeah, and also there's a lot of, you know, there's a lot of resources in Australia, not just government resources, but you know, professional resources that can help you when you do your expansion up into Southeast Asia. And we've found that, and so being based here in Australia has made it, you know, a lot easier for us to move into Southeast Asia, and it's also a mindset. So if you talk to someone in the US, for example, if you talk to them about moving into Latin America, for them, that's quite a smooth part. But you talk about expanding to Southeast Asia and they look at you like with all the fraught dangers and risks. But for Australians, if you talk to them about, you know, not necessarily all Australians, but, you know, I'm doing generalizations about, you know, moving into Latin America, they think about risk. While here, you know, Southeast Asia is not as scary for us, just because of the culture connections that have built up over the last, you know, 40 years now. From, you know, a lot of Southeast Asians coming to study in Australia, and obviously inflows from people from South Vietnam, but also from Malaysia and from, you know, other Asian countries in Southeast Asia and Asia itself, which has, you know, expanded our cultural knowledge, I guess, in Australia. So it makes it a lot easier from that point of view.
Yeah, absolutely. The opportunities in Asia are certainly quite spectacular.
I think just to briefly add to that as well, the Australian wealth industry is extremely robust. It's very mature. It's globally leading. The addressable market in Australia for that wealth management space is, you know, over $3 trillion if you include the superannuation component. And to sentiment what George was saying in terms of the resources, when at Stone and Chalk we did a trip with Austrade up to China, and it was actually interesting to go in and hear about some of the battles and some of the challenges that any country that's going through a massively expanding middle class is going through, and that maturity of that wealth sector that needs to come into play, and there's a lot of Australian expats all over the world helping out on that journey. So I think it's going to be a very interesting opportunity indeed.
Yeah,
and I think Australians, you know, one of the handicaps for Australians, I guess, is because a lot of the Southeast Asian countries have skipped a lot of technology parts, like, as I was saying, they haven't gone to the PC. But we're also seeing in countries like Indonesia that they're actually skipping traditional financial services assets. So right at the moment, crypto assets will trade and have a larger volume than what trades on the Indonesian stock exchange, and is more engaging for Indonesians, you know, stable coins or just crypto assets in general, than if you go up there and offer like a mutual fund or even a stock. And so it's quite interesting to see how these countries are evolving and and skipping a lot of the technology that we take for granted, and going down different paths in financial services.
Yeah, absolutely. I think the broadness of experience that we've had as a mature superannuation industry, and the assets that we've had exposure through there can certainly be used in other markets that are more emerging, as you say, George. Lastly, one other question that I'd like to pose to the panel today is, would anyone like to elaborate on which acquisitions have been key in helping with your growth and expansion from startup to now?
Probably go first on that one. Since the end of 2019, we've done 5 so of very different, varying sizes, mostly from the very small, but so inclusive of my own business that's been acquired into open markets to form the open markets group. But I think it's been interesting. I think that the mindset of Australians has very much been around collaboration and working together. So people have been pretty open about trying to go and achieve the same goals together, and anything that goes and speeds up the pathway to market. I think we're sort of the view that we don't need or want to own the world. We do want to partner along the way. I think that the right acquisition at the right time is pivotal. Some take a little while longer to work out than others. Others, you see immediate effect. We're just finishing up 2 right now out of those 5, and one of them, which was a kind of a key acquisition of more of our API technology, has paid dividends immediately. Before it even managed to, before the ink even managed to dry. So, I think that the mindset of people in Australia, there's a fair bit of consolidation that's starting, that's increasing. And I think that we're going to see quite an interesting space in the fintech sector in the next year to 2 years, as it's becoming a dominant component of the financial services industry in Australia.
Perhaps if I jump in. So look, from a SelfWealth perspective, the way in which the addressable market has grown, we've been focused on client acquisition and, really focusing on a per panel strategy. And so, our efforts have been predominantly in there. However, what I would say is that, SelfWealth is very aggressively growing, very inquisitively growing, looking at all inorganic opportunities. I think, as we branch into wealth creation platform territory, and instead of, to date being focused more on the equities trading, there really will be, a race as to, who can accumulate, the asset types in the right way, make it presentable to retail investors, the coordination of that. So, I think it will be a very interesting time across the Australian fintech landscape in the next 12 to 18 months, as these opportunities really play out.
Absolutely. Exciting times ahead with so many innovations in the fintech industry. It really is about collaboration, partnership for the future. So it'll be really interesting to watch. Thanks very much for your time today, Cath, Ivan and George. Really appreciated the chat, and thanks very much for your time.
Thank you very much for inviting me.
Thanks, Leanne.